the stock market and the economy, they don't always mirror each other. And that's fine. That's how markets work. That's how you find investing opportunities, right? But this one just feels a little bit more, it just doesn't feel right. It feels a little more off than normal. And look, I think the market, a lot of what's driving the market has been the historic amount of stimulus that the Fed and the government has put towards combating the coronavirus pandemic, which has really been great for risk assets like stocks. But on the other side, just like you mentioned, we are 3 months into this pandemic. 22 million people are still out of work collecting unemployment claims. We heard that yesterday. And over the past 2 weeks, social unrest from racism and class disparity has erupted all over the country. So it's an interesting time in our economy and in our country in general. But the reality is the market's made up of some very large companies that are better capitalized than smaller ones, and they're able to continue the flight and move higher.
Well, you know what? And guess what? We're talking about income inequality a lot lately, as we should be. And yet we got markets making new highs. You know, and you're going to hear these stories. I guarantee it. I could write them right now myself. Jeff Bezos makes another $10 billion this week. I mean, it's a tough contradiction to have, especially in this time in the United States, is it not?
Yeah, no, absolutely it is. And look, it's not a question of being moral or just. The stock market is simply reacting to the stimulus that it's receiving from the government. The jobs report today, I think, is so important because, you know, we learned last month, in the month of April, that African Americans now, less than 50% of them have jobs. The unemployment rate for African Americans jumped to 16.7% in April, which compares to the Caucasian unemployment rate of 14.2%. And African Americans, they are usually disproportionately impacted by recessions, where their unemployment rate will jump significantly higher over the course of the recession, and their jobs come back a lot slower. So it is a critical time in our economy, and something that you know, our government needs to really take notice of.
Yeah, you know, I actually read a white paper last night about the 1918 pandemic that says that after the pandemic in 18, the working class is disproportionately hit from an income perspective, and that assets tend to actually do pretty well. But that's for a different segment here, Lindsey. Let me ask you a more difficult question, okay? Outside of the stimulus, you know, I'm talking about unemployment benefits, money that goes directly to workers. Do you believe that when we look at the markets that it needed all of the back-end market stimulus that it got? I mean, direct buying of ETFs, bailouts for corporate debt, effectively bailing out the oil and gas companies by buying up distressed corporate debt. You know, there's two sides to the stimulus story. Do you think the markets needed that?
Look, I think that the market definitely was showing some strain and wasn't working efficiently when we were getting to the depth of this crisis in March. So I think the Fed had to step up, and they had to move quickly, and they moved faster than they ever have in any type of crisis. So I think I applaud them for the courage and making the move, but it seems like the stimulus should have been more pointed towards smaller businesses and individuals, and even smaller public companies who are much more significantly levered than larger companies. So that's where I think the difference could have been.